Hello, my name is Joe Hoyle, and I'm speaking to you from the University of Richmond here in Richmond, Virginia, where it's an absolutely beautiful day today. It's a great day to learn about financial accounting. And today we're going to look at Chapter 2. Now, by now, you should have read Chapter 2. And what I hope you have done as you've gone through Chapter 2 is to look at the chapter and pick out the 5 things that you found to be the most important. As I said in Chapter 1, I like the idea that students evaluate what they're reading, that they think about what's most important in the material that they see. Now, I went through and picked out 7 or 8 things that I thought were extremely important, and I've narrowed it down to my top 5. Now, as I've said before, your list and my list can be different. I'm simply interested in how you and I compare when we went through the chapter and looked at what we thought stood out among all that material. Here is number 5, and that to me was the fact that financial information is presented to outsiders in the form of financial statements. We introduce those financial statements in much more detail in Chapter 3. But in Chapter 2, we throw out the idea that there has to be a form for the financial information, and that form is financial statements. Throughout the remainder of this book, when we talk about what you see, we will often mention that we found this in financial statements. That is one of the main coverages that we see in this textbook, the idea that information is presented to outsiders in the form of financial statements. So although we did not go into much detail here in Chapter 2, I thought that was the 5th most important thing in the chapter. For me, the 4th most important thing was the idea that uncertainty creates such a challenge for financial accountants. Anyone can report if there's no uncertainty. But in a major organization, uncertainty lies everywhere, and the accountant is constantly having to try to figure out how to report events, how to report things that happen when there is uncertainty going on. We talked about selling on credit. We talked about lawsuits. Those are very uncertain events. How do you paint a portrait if you have uncertainty? That's something that students don't often recognize. But it is such a significant challenge, such a significant problem to the financial accountant that I place that on my list at number 4. To me, the 3rd most important thing in this chapter was the concept that financial information needed to be presented fairly. We have said often that the information cannot possibly always be exact. It cannot be correct. It cannot be down to the penny. So we have to have a goal for it, and that goal is that it should be a reasonable likeness of the organization that it presents. We need a term for that, and the term we use is presents fairly. And as I mentioned in my opening video, we have come to mean that the information contains no material misstatements. Misstatements, of course, are errors and fraud. Material is something of a size or type that would change a decision maker's decision. The whole concept that the information you're presenting is presented fairly so that users can make use of it to make their decisions in a good way underlies the whole idea of financial reporting. And I put the idea of present fairly as the 3rd most important thing in this chapter. Now, we're getting to the very most important things. What was number 2 for me? To me, at the end of the chapter, I presented 4 essential definitions: assets, liabilities, revenues, expenses. Those are so central to the reporting of financial information that for me, Those 4 definitions were the second most important thing in this chapter. If you start out by understanding that an asset is something you own or control that has probable future economic benefit, that a liability is a debt, something an organization owes, that net assets are assets minus liabilities, that revenue is the inflow or the increase of net assets from selling a good or a service, and an expense is an outflow or a decrease in net assets in hopes of generating revenue, then you have already gone a long way in coming to understand the conveyance of financial information. We talk about understanding that conveyance of information. Those 4 terms are more than likely the most important terms that you'll encounter in this book. We deal with them often. We define them often. They clearly are very, very important, and I put them number 2 on my list of the important things in Chapter 2. And, of course, finally is number 1. And I thought a long time about what I thought was the most important thing in Chapter 2. And I finally settled on the idea that to be able to communicate, you have to have a structure. That you simply cannot communicate without a structure. And in financial accounting, at least in the United States, that structure is provided by US generally accepted accounting principles, what are more commonly called US GAAP. Anytime that you start talking about the conveyance of financial information using financial accounting, it is guided, it is ruled, it is structured by US GAAP. And as I said in my opening video, you could easily say that this entire book, this entire course, is the study of US generally accepted accounting principles. If you make that statement, it's hard not to think that that concept was the most important thing introduced to you in Chapter 2. Now that was my list. What did you think? Did you come up with different items? I argued with myself. But just by knowing what you and I think are the 5 most important things, you've already made a great step forward in learning the material presented in Chapter 2. Good luck, learn it all.